The following is an update and technical analysis on the equity markets, the Treasury markets, and the US dollar index, where I regret not being here within the past few days. How it's been a remarkable week for trading, where I'll keep this as brief as I possibly can, whereas I'm dealing with COVID and I'm gradually recovering, diving back into analyzing charts and the economic data, and what seems to be that inflation is clinging persistently, a less than rosy labor market that's starting to crack, and a dwindling sense of optimism doesn't quite align with the soft landing scenario the Fed and many pundits are hoping for. Instead, it is showing more signs of potential stagflation, and we'll deep dive straight into the S&P 500 futures off the daily level here, where we have been rejected upon the 45.28 price resistance that I continued to amp up in my previous video there, based upon this divergent high, near-term divergent high that we had put in place with negative and bearish divergences that were constructed really amongst all three technical momentum indicators there. And it looks like we're starting to get 2 days worth of those violent rejections off that key transitioning point. Taking you into the Nasdaq100 futures based upon the CME exchange here, and I believe we're at a key juncture. Once again, we have taken out this primary that we have popped back into the primary trading range right up above the 15.48630 price resistance correlated with the 786 Fibs retracement there, and we have slightly recovered this primary uptrend line that I've been hyping up about. And the last 2 days we had two reactionary lows right across that juncture, and again a bullish sign there, and what appears to be a bullish sign there for long traders and or bull traders, where we're going on to retest the zero line threshold there on the moving average convergence as well as the oscillator. Not a whole lot to say there, but again, it has been, that's one check mark you have to give to the bulls, that it has been recovered. It has been recovered there alongside the 50-day moving average and above that trading range. But again, not a very telling and or convincing. Again, you, like I had mentioned in that previous video, you want to see a solid daily candle close to signify that bulls are in complete and full control right back in this trading range. So again, I have to put a potential check mark here based upon how we closed then on Friday, and was not a very convincing and telling sign that, again, bulls were in complete control there. Taking the US Tech 100 futures here off the daily interval, and we are starting to slightly pop this primary reactionary minor downtrend line that I had mentioned there. And it looks like we have multiple days of reactionary lows right across that key juncture. And again, not a whole very telling. We're bull traders, long traders wanted to see a solid pop, a solid daily candle close, whereas this kind of signifies, in my opinion, potential stop rates only for a potential momentum fueled overshoot right back into that key trading range. Whereas we have the stochastics 1033 technical momentum indicator on a potential bearish crossover pattern here, if and when we go on to retest that. If we break down right below back into that key trading range to retest the 15.281 price support correlated with the 50-day moving average, call it a dual line of transitioning support levels there, that would give you the confirmed crossover there in the stochastics 1033, and then a potential rejection of the MACD and an additional longer term bearish crossover setup there, where again, bull traders, long traders, they want to let short sellers, bear traders know that they're in full control on Monday by opening up and popping this level in complete with full conviction and authority to go on to retest the 15.71890 price resistance up above. Taking you to the US 2000 Russell 2000 futures here off the daily interval, and I believe we have taken out the 1899 price support really with conviction there. Would have liked to see a nice daily solid candle close up above, but again, especially for an active and or day trader, really opened up to the button off that 1899 price support, and especially if you're an active and or day trader, could have netted you there 1.5% in gains right off that key strength of that price support level. And I continue to hype and harp up how strong this key inflection point really was, with just a multitude of reactionary highs and reactionary lows across that entire board to help strengthen the validation of that price support level. And that is a check mark for the bulls, where they have completely recovered that key inflection point, bouncing right off this primary uptrend line that I had noted previously, where we had a two reactionary low back test, and it was off to the races since then. Especially if you're, again, more of an active trader, more so than a swing trader, netted you 3.9, almost 4% in gains to the upside once recovering that key inflection point, where look a lot more healthier and sustained momentum than the other two indices. Taking you to the US dollar index futures here off the 240-minute interval, where we caught this breakdown, ended up backtesting amongst the 50 to 40-minute moving average, and we ended up getting rejected impulsively to retest the 102.96 price support, and that was back tested and reacted upon a reactionary low really to the button, especially for an active and or day trader there. That netted you all the way right back up to that T1 target in a recovery of that primary uptrend line there off the mid-July reactionary lows there, and that entire trade on a big currency move for 1.2% in gains. It's just a very volatile move for currency to stretch out with those kind of gains and moves to the upside in only additionally a few days of trading. And what makes this move exceedingly important as of now is the recovery of amongst this primary uptrend line. And it looks like we may be backtesting. We came up, took out the 104.10 price resistance, backtested it once again, and then we ended up, looks like we're slightly backtesting this primary uptrend line. So again, what a heck of a drop with a sell signal. And the fact that this entire move was retraced is exceedingly bullish in my opinion, which could potentially have a retest of the 104.53 price resistance. And if dollar bulls take that level out, they pop that level with a solid 4-hour candle close above, then you'll begin to avert and burn off these negative and or bearish divergences that we had. And I remained how adamant this huge price support level was for the moving average convergence. And now with what looks like a bear trap, whipsaw-like reaction on a complete bullish crossover setup to move to the upside, and what looks to be a lot more promising in infusing health back into these technical momentum indicators. But a move of that nature right there will undoubtedly put pressure on the equity markets if and when we take that level out, burn off these negative and bearish divergences off this divergent high, and enter a very fast move to the upside. Taking you to the US 2-year here off the daily interval. Again, I had mentioned this minor primary uptrend line here off the June 2023 reactionary lows here, coinciding with the 50 exponential moving average. Looks like we're going to sink right down below it, and we had, again, an additional whipsaw-like reaction. Very bullish for yields, whereas you have the stochastics 1033 now starting to hone in on a potential bullish crossover if and when we get there. But that is a key inflection point that was recovered impulsively by yield bull traders there, and we could only suspect now that resistance now becomes support where they need to defend really bear traders, short sellers. They want to see a continued move to the upside, shorting the heck out of the 2-year there. And a prolonged move to the upside, re-challenging the 509 price resistance that was rejected pretty impulsively off that first test. Taking you out to the US 30-year, and wow, what a convincing reactionary low, really to the button here off the 786 fibs retracement. If you've been copying and following my charts in previous videos there, off the 4173 price support there, and darn near to the button there, especially if you're going in to short the 30-year. That entire move on a short trade setup, very active in only 2 days, was good for almost 3% in gains to the upside, shorting the heck out of the 30-year, where the long end of bonds have been absolutely bludgeoned the past 2 days there. And taking it out to the 10-year US Treasury here, and again, I couldn't hype up this primary reactionary uptrend line here off the 2020 reactionary lows, and wow, what a key inflection point, especially if you're short on the 10-year. Really to the button there, slightly got rejected off the 420 price support. So Monday, Tuesday next week will be a very pivotal moment. A ton of economic data coming out after 9/11, and that was good for 3.5% on a complete short trade setup, eking out those gains on a potential bigger move on a blast past the 420 price resistance. And that's going to be very crucial to watch in a big move if and when short sellers, bear traders take this level. If they pop this level with a convincing solid green candle close up above, I would only suspect on the near term daily interval with no resistance in the near term up above could be a prolonged move to the upside on a big short trade setup for bonds. Now taking you out very briefly to the US Tech 100 futures here off the 60-minute interval. And for any active and or day traders that want to gain in on very quick active trades here, I have this concealed primary reactionary downtrend line here off the mid-July reactionary highs. Cuts through some wicks and reactions right across the sphere there, and I believe this to be a pretty monumental key injunction point where it looks like we may have had a breakdown sell signal based upon this minor primary uptrend line here off the late August reactionary lows here, and that is a very key inflection point where we may have put in an additional sell signal here on the hourly. Not confirmed yet, but again, we have near-term negative and bearish divergences that have constructed amongst all 3 technical momentum indicators here, coinciding with the stochastics 1033, call it 4 out of 4 technical momentum indicators there, with the breakdown off this minor uptrend line here, and anything's possible for Monday, where I've added these new key additional targets. I'll take away all the lines off the Fibonacci retracement, where the 618 fibs retracement, very monumental there, for a bigger breakdown if and when we take that level out, correlating with the 15, call it, let me take it away. These are your key inflection points. and some price support levels to watch. If we take this level out, called 15,429, slightly below, we have the 618 fibs retracement. I can only imagine a bunch of stops to go off, margin calls, and a bigger wave of selling, potentially back down to the 15,281 price support correlated. These tan coded color support price and support levels, price and resistance support levels are correlated with the daily interval, and again up on top of the 15,718 price support there, price resistance. And I believe some of these key junctures are taken out, then it's going to expel further damage in some of the longer term intervals, starting off here with the hourly interval. But again, you could have a counter trend rally right back up, a huge counter trend rally up on Monday, bringing you back up to the primary downtrend line correlated with the which you would call 15,625 price resistance up above, offering an additional great objective short trade entry, if not a scaling in process. And if we pop that level, bull traders, long traders want to see that level go. And then additionally, I believe the short sellers, bear traders must hold the 15,718 price resistance correlated with the daily interval really at all costs there to avoid a breakout and then have a false breakout, call it a false breakout, momentum fueled overshoot coming right back into this range, trapping in a ton of long buyers. And then I would only suspect a very volatile move to the downside if and when we get there. Whereas long traders, bull traders want to pop this level, take that level out, and have a sustained move to the upside, keeping the primary rally in check. Taking you out to the US 2000s, Russell 2000 futures here off the 60-minute interval, and is probably, I believe, in my opinion, looks probably like the more bullish of all indices here, where we have this primary uptrend line that needs to be defended really at all costs now, where it's correlated with the 1912.50 price support here. And that is a very strong level of support here on the hourly interval. And bull traders, long traders want to step in really at all costs here to avoid a potential hourly solid red candle close on a sell signal, to avoid that key junction really at all costs, maybe on an incline right back up on a re-challenging of the 1944 price resistance, and then ultimately the 1954 bigger price support up above. Again, all of these tan colors correlated with the daily interval there. But again, these are just key levels to watch, hone in on. And additionally, you could make the case that we are starting to build MACD divergence here. If and when we break down amongst that primary uptrend line, you'll have a confirmed bearish crossover there in the MACD, putting MACD divergence, divergent high really intact there, only increasing the odds for a larger move to the downside. Re-challenging, though, the 1899 price support, which is a heavily validated, strong price support level there. Again, correlated with the daily, where bull traders, long traders would want this to be a false breakdown, and they would need to defend this level really at all costs on the move to the upside. I'll keep you updated if I see any more significance in the charts.